All right, what's going on, everybody? Welcome to another episode to the Latin Wealth Podcast. I'm excited about today's episode because we're talking about finances today. All right. And you guys know I love talking about finances. You guys know I love diving into these topics, especially parts of finances that we haven't spoken about before on the podcast. So just stay tuned. We're about to get into it. We're going to introduce our guest right now. He is the owner of the Marathon Group, he is a licensed broker, and he's also known as a finance plug. All right. We're going to get into how he got that name and everything that he does. Right. So, welcome to the podcast, my brother Rico Ramirez. How you doing, bro?
I'm doing good, Chris. How you doing, man?
Man, I'm blessed and well. Thank you for jumping on the podcast. And I also want to say thank you for always supporting the platform. Rico is one of the guys since day one that's always supported the platform, which is like liking, commenting, or reposting, sharing, getting people to know more about the Latin Wealth platform. So we really appreciate that. And not only that, he is in the financial space. So we definitely wanted to highlight him, bring him on so he can share some information with you guys. It's going to be a dope episode. So yeah, thank you, bro. I really, really appreciate you. Every single repost, like it means the world to me for sure.
No, man. Foremost, we gotta support our own, right?
Yeah,
And the thing is if we're not supporting us, then who's gonna support us? So you guys drop some dope
yeah,
information. You got some dope content that's coming out. People come on and just gave some gems.
yeah.
So, man, I just want to make sure that everyone has the availability and able to, accessibility to hear the stuff. So I appreciate it, man.
Yeah, absolutely. So before we get into, your story and whatnot and the finances, I know scrolling on your page, it seems like one of your favorite artists is Nipsey Hussle. You're the owner, the company that you own is called the Marathon Group, which is super dope. The reason why I bring it up because Nip is one of my favorite artists all time. When they
Yeah.
ask me what my top five is, he's in my top five, right? So
Yeah.
I want to know, what did Nip mean to you? What are some things that you learned from him that you applied to your life? And yeah, what makes him, what I'm saying, an artist that you gravitate to so much?
So for me, Nip was more of he was symbolic. He was a
Yeah.
representation of what we could be and what we aspire to be for
Mm,
people that come from, certain neighborhoods that we come from. We don't have a lot of exposure.
right.
There's not a lot of opportunities and things that are presented to us, but Nip showed us that just through just through applying knowledge and self-taught knowledge in many
Mm,
cases, and just seeing him being able to rise levels, becoming an owner of his
mm,
own brand, started branding himself, and then started integrating himself. He was literally vertically integrated into a lot of different businesses. So,
right.
and if you listen to his music, he was actually providing kind of like the blueprint to get to where you
Yeah.
want to go. So for
Yeah.
me, he's super influential. The world's still at a great loss, obviously without him around. So for me, he was super influential in just the things I would listen. A lot of people just listen to the music, but for
Yeah.
me, he was like speaking and giving me like, bro, this is how you do it. You take this and go talk about
Mm,
this and this. He even mentioned life insurance in one of his songs, man.
yep.
So it's everything. He meant a lot. He represented coming from the struggle
Mm,
and superseding that and being successful, triumphant as a person.
yeah, I love that. It's crazy because, like you said, listening to his music, a lot of people just listen to the sound, but if you listen to and read what he's really saying, it's like he's definitely leaving out a message for the people, right? And I almost think of it as reading a book. Sometimes when you read a book two times, three times, you always pick up something new. Same thing with his music. Like I'll listen to some of his songs. I'm like, damn, that hits different in my current life, where I'm at in life. So yeah, rest in peace, Nick. Definitely one of my favorite artists. Yeah, I agree with you, man. Definitely symbolic of, I like what you said of what we can aspire to be. And I also love that he was just always real and authentic and true to himself, right? Wherever he was at, he was
100%.
he was himself, and I love that. And a
And
lot of
that was
people,
one of the things that, yeah, no, I
yeah,
was gonna say that's one of the. I agree with you. That's one of the things that pushed me to really love his music and love him as a person is because regardless of like gang affiliation or
yeah,
whatever people feel or whatever, but it's like that's the reality we grow up in,
hmm,
right? So to see somebody that looks like us and do what what he
Yeah.
did and then say, hey, I'm crossing all barriers. I'm
Yeah.
in business. I don't care about red, blue. I don't care about any of that. I
Yeah.
love my brothers. Like it's just super influential, man. And that's where the Marathon Group actually came from.
Yeah.
The name of the company.
I love that. I love that. And it's funny because there's a clip. It's like a 6 minute interview with him in a news station out in LA. I don't know if you've seen it, but it's funny because he again Nip is himself. He's gonna dress the way he dressed, and he's gonna talk the way he talks. And these newscasters, they talk the way they talk. So it's just an interesting dynamic of the conversation they can have. But he still, being himself, really, his light was shining in that conversation, and they were really taken back of who they were talking to. Is what I'm trying to say. But yeah, rest in peace, Nip. Definitely very influential. I had to ask about that. But I also wanted to ask about, man, where did the name the finance plug come from, man? I really want to know where this nickname came from. Talk to us.
Yeah, so that nickname came from just being in finances. So, man, I grew up in a situation that was just like a lot of people's,
Yeah,
right?
talk about it.
A little bit disadvantaged, all right? Parents not around all the time. There were some things that you saw when you were growing up, a lot of drugs,
Yeah.
prostitution, different things, right? So,
Where's your family
the
from?
like so originally we're from Puerto Rico.
Yep.
Yeah. And so, just seeing different things, there's not a lot of opportunities. And by the way, I want to say before I continue, prayers up for Puerto Rico because they're going through
Yep.
something extremely difficult right now. So I want
Yeah.
to say that we got famine and everything that's out there. We're praying up for that. But
Most
yeah,
definitely.
bro. So moving through that space, I always just kind of had an affinity. I played sports, so I was blessed to be able to like go into I guess they say across the tracks and go into different homes and see different things. And while
Yeah.
the other kids were running around, I would ask the parents, like, hey, how'd you get this? I
Mm.
see paintings and I see cars and they talk to me about credit and finances and entrepreneurship and all these things. And I'm just sitting like in my head. I was
Yeah.
young, but I was adding it all up. So I got into finances really early and got good at it.
Mm.
At like the age of 13, 14, I started diving into I didn't actually have a stock uh obviously a stock account or a trading account or anything, but it was a fake one, right? And
Mm.
so I learned about like charts and all these different things. And you know, progressing to high school, and people were like, they would come to me and ask me, hey, my dad. So I would sit down with people's parents and I'd be like, hey, did you see this trend? And so I would help people's parents with their stocks.
And so you
And
wait,
so
wait,
it
wait,
just
wait.
kind of started.
My bad, bro. I don't want to cut you off, but you said you started at 14.
Yeah.
Bro, that is nuts. That's crazy, bro. That's a huge
Yeah.
blessing right now. I mean, at 14, I was thinking about sports and that was it. You know what I'm saying? So that man, that is
No, me
crazy.
too. Me
Yeah,
too. Me too. You know what it was? You know what
yeah.
it was though? It was like, I don't know why, but something in me was like, I knew I couldn't, like, I knew sports was good. And I was a good basketball, football player.
Mhm.
I ran track. I was good at sports, really good. I went to, college on a basketball scholarship, but it's like, you know, I knew that the chances of doing that in the long run
Mhm.
were slim. Like I was
Mhm.
good, but I knew like, yo, you never know.
Right,
And
right.
but I saw these other people making money, and I'm like, oh, dude, I could do this, and so I just kind of hung on to it, bro.
Mm. Man, that's what's
Yeah.
up. So you said some of your friends' parents, they were coming to you and they're asking you questions. Talk to us about that.
So I had a friend of mine, and we were in economics class, and we had this some type of project, right? And then we had to kind of scale it against the way the market was going for real.
Mhm.
And it just so happened, of course, I like did best on the project, and my games was like crazy. And the teacher
Mm.
was like, how'd you do this? And I was like, I studied the charts. And they were like,
Mm.
what? And so that one of my friends was in that class. We're at his house one day, and his dad was like tripping because I guess he had lost some money or something. And then he's like, and the kid was like, hey, dad, you should ask Rico. And he's like, ask no kid about. He's like,
Mm.
nah, you should ask Rico. So he's like, what do you know about this? And he gave me the Wall Street Journal, and I started going through some stuff and just talking about the different trends, calls and puts and stuff. He was like, hang on. He's like,
Mhm.
okay, so what does this look like? And then, lo and behold, this was around the time Google everything. I mean, I'm telling my age, but Google and stuff was getting more
Right.
popular and stuff. So I had him take a position, and within like a month, he had gained. a
Mm-hmm.
substantial amount of money. It was like over $10,000. And so he was like, yo, and he like put me on with his friends. So his friends, they all had this kind of like stock club or something. And then he started bringing me like to the meetings. He's like, hey, can you help talk to my friends or whatever? And they were kind of like in disbelief. He's like, no, just listen. And then people started getting money. So then all that carried over. And the kids started just being like, yo, he the plug. Like that's the plug for like
Yeah.
finance stuff, right? So out of their makings, whatever they would make, whatever the parents would just give me like a little
Mm-hmm.
bread out of it, a little money. And like, hey, it was obviously I wasn't making like
Right,
crazy
right.
money, but it was something. And so everybody was like, yo, when it comes to finances, that was the plug. And it just kind of carried in college because I used to help my friends, get themselves set up. We set up
Mm-hmm.
you know, ETF accounts, and it's just all this stuff, right?
Mm-hmm.
And that all led to me. I was gonna get my Series 6 and 6 in my Series 7. And I was like, yo, I want to work for Merrill Lynch because they were really
Mm-hmm.
big back then. Edward Jones, Merrill Lynch. I was like, yo, you don't even see none of us. Like,
Right,
think about it, Latino. And moreover, an Afro Latino, like going into that
right.
space.
That's crazy, man. So talk to us about your parents. What were they thinking when you were getting into finance at 14? And I mean, you mentioned yourself that, your family's from Puerto Rico, they probably grew up a little bit more rough. What did they think about you getting into finance at that age? And did they see it as something that they can do themselves? Was it, talk to us about, their support that they had for their child going into finance.
Um, I mean, and this is no shade to anybody. I think let
Right.
this be motivation to people. My parents didn't support me.
Yeah.
My dad just really wasn't around like that. And then my mom was really busy.
Yeah.
God rest her
Yeah.
soul, my mom passed, but she was really busy at that time. And she was trying to provide, right?
Yeah.
And she was doing the best that she could. So she didn't really, you know, there was no really kind of support like that. I had my
Yeah.
grandparents, but there was never really any like family support or anything about what I was doing.
Hmm.
I think they were really surprised. There was like a write up or something about me and doing some stuff, whatever, and they were just kind of like surprised about it. So there
Yeah.
wasn't really any support, but they were doing the best that they could. My mom was working and she worked a lot, so
Yeah.
I get that.
So no. I love that. So I'm curious, what kept you going through all that? Like maybe you didn't see the support. Maybe it was the money
Yeah.
that you were getting. What was the what made you keep going through high school and college to want to continue to want to do that? And especially you talking about
So
Merrill Lynch, that you didn't see anybody that remotely looked like you in there. Like, what made you want to go down that path?
Um, honestly, it was the representation, bro. It was
Yeah.
to want to do something better. You don't see us in spaces, right? And I've always kind of been socially aware
Mm.
of what you see and what you don't see.
Right.
And I want to give back too. So it was like we don't see this in the hood. Like, really who you see that's successful is drug dealers,
Mm-hmm. Mm-hmm.
you know, pimps, all these different type of people. You don't see doctors, lawyers, engineers. You don't see finance people.
Mm-hmm. Yeah. No, I love it.
So,
Yep. Yep.
for I was just gonna say, so that motivated me, to just keep going to try to be that example for people because there's other people that want to reach and attain this stuff, but maybe they don't have the blueprint, right? So maybe
Mm-hmm.
I can, out of this jungle or of this whatever these trees, there's like the promised land, right?
Mm-hmm.
So how are you going to get there? You got to use a machete and you got to chop all this stuff down. So I just want to be the type of person in my neighborhood or my community to be able to do that and then provide a clearer way for somebody after me. Honestly, that's how I thought about it.
Mm-hmm. Okay. Dope. So after college, what school did you go to? And then, what happened after college? Like, what did you get into? What was the next step for you?
So I went to the University of Houston.
Okay.
I was gonna say go Cougs in Houston, Texas. So I did that, played basketball, got out of there, went pro in Argentina, and I was
Really?
playing basketball. Yeah,
Okay, dope.
and hurt my knee like a year and a half in, hurt my knee, and it was just kind of like, dang, what now? But obviously, I'm my degree that I got in college. Um, I didn't get a financing degree. I
Hmm.
was like going to do it, and I ended up getting a chemical engineering degree because I
Hmm.
knew that you could get a job, and I was just kind of like,
Yeah.
whatever. And so I came back and I got into engineering, but at the same time, I was always still in my stocks and I was still helping people, and I
Hmm.
was still like, in that mindset of doing finances. And so I never stopped doing it, but at the same time, I got life happens, I
Hmm.
had my son, and it's
Hmm.
just life happens, so things happen, and I started focusing on engineering super heavily, and I would just kind of piddle with the finances, and like I said, until I actually stumbled into, I don't know how it happened. It was a Primerica person, and they had
Hmm.
talked to me about just whatever, whatever, and I was like, finances, like life insurance, and so I ended up, that led me into that path. So
Hmm.
there was nothing financial about what I was doing when I got out
Hmm.
of college. Like I was basically trying to be someone like everyone else,
Yeah.
focused in on just providing and making sure I could pay the bills once I got done playing basketball, right? And making sure
Yeah.
that I could just, we keep food on the table and working. And then it led into, later on and
Yeah.
back into finance. Yeah.
Love that. Love that. So that's a good segue. I definitely want to get into something that's not spoken about very much in our community, which is finance. And there's definitely platforms out there that are doing a phenomenal job of having these conversations, but we need more people, right? You and I spoke about this. We need more people having these conversations. We need more representation. And we need to have these conversations more oftentimes in our household. And to go even further more than that, more specifically about life insurance, this is not a conversation that I had growing up, and I'm sure it's not a conversation that a lot of people had growing up about life insurance. When you think about finances, it's probably some fear factor that's attached to it, right? Some fear conversation around that. It's not always about strategies and whatnot. What specifically can you do to improve our financial situation? So I would love for us to get into that. It may not be the sexiest thing to talk about when you talk about finances, but it's probably one of the most
Yeah.
important and a very critical thing when talking about building wealth is life insurance. So
Yeah.
the floor is yours, man. I want you to break down what life insurance
Thank you.
is. Um, for those that don't know what it is, and how does it work? What are the benefits, man? Break it down, and so the people can understand what it is if they don't know.
Okay. Yeah, man. First and foremost, a lot of people, when it comes to, just as you said with finances, it's not the most sexiest thing to talk about. But I feel like a lot of people's mindsets are limited on life insurance.
Mm-hmm.
So, what life insurance is basically, right, a warranty or a contract between you and a company. They call them life insurance carriers, and they're betting on you living, right, so that you don't get to, because the majority of life insurance policies are what they call term policies. They're usually, they're in place for up to 30 years.
Mm-hmm.
But if you get one at 20, at 50, you're still living and you still got 40 years to live. And so they're right. So the life insurance carrier is betting on you living, because all that money you put into that, right, into that policy, it just goes to them, and you didn't use it because you didn't pass, which is, you're happy about that too. But
Mm-hmm.
they're even more happier, right? Because they got the money. And then of course you're paying into it. And so you would be, this sounds kind of morbid, but
Mm-hmm.
you're betting on you dying,
Mm.
because in your family, right, that's generational
Yeah.
wealth exchange. And that's the easiest way for people, actually, when it comes to them talking about generational wealth. Now, we could sit down and we could talk about being diversified with your crypto portfolio,
Mm-hmm.
understanding tokenomics with crypto, getting into stocks, understanding mutual funds, all these different things, which is great. And I call those rooms inside of your financial home. But the
Mm-hmm.
basis of that financial home, the foundation, should always be life insurance.
Mm-hmm.
And the reason for that is because it's extremely, extremely affordable, right? And a lot of people don't know that, but it's extremely affordable, and it places you and your family, right, and future generations to come in a good position.
Yeah.
So, when it comes to life insurance, most people don't talk about it because no one wants to talk about death and things like that.
Mm.
But life insurance has evolved, man, so much since the days of the 80s and the 70s, and even the 90s. There's life insurance now that's made for you while you're living, right? There's things called living benefits that you get in a permanent policy that, if you happen to get, let's say, a heart attack, stroke, or cancer, these are things that happen to people when you can't work. That policy will pay you monthly,
Hmm.
right? So you can help to pay your mortgage, pay your car notes, or whatever you have. That's actually comes from a life insurance policy.
Yeah.
And then, leading into the next steps, I won't go super deep or technical into it, but you know, to be honest, life insurance is great also for for there's tax sheltering purposes. There's people, if you're hearing the craze about infinite banking, that's available as well with life insurance. Becoming your own bank, your own or family bank. Uh, you know, building out a trust with these policies to where you can put money into the life insurance, leverage that money, borrow against it, right? And put it into real estate or whatever else it is that
Hmm.
you're into, and you still have that money accruing interest, and the interest that money is accruing is much higher because people always talk about, what have we been taught, bro?
Hmm.
We're taught to, go to high school, go to college, you get out, you get a good job, and you work for 30 to 40 years, right? And you work for those 30 to 40 years to end up just using 40% of your income in your retirement year. So you're kind of limited and you're capped. A lot of people go through, what do? We save in banks,
Hmm.
we save in 401ks. There's all these various different things that we use, right? But we're getting not as much, right, on the interest side or on the accrual, on the accumulation. So in a bank, I was talking about this the other day, Chris, and it's crazy. I was with my friends and he was looking at he's looking at his on his phone, he's looking at the app,
Hmm.
and he's like, "Hey, I just got my interest payment, and it was 3 cents." And he was like, "Yo, what is the purpose of this?" And I'm like, "Man, that's the banks. That's how they work." And
Yeah.
so
Yeah.
we have to understand as a people how to take our money, put it into something, right, that can be leveraged and grow additional interest. And just there's a lot more information about it, and
Hmm.
obviously you go more in depth and you start to understand a little bit more about it. But life insurance in itself is the basis of the way the wealthy remain wealthy, and a lot
Yeah.
of people don't know that.
Okay. Okay. So there's a couple things there I want to break down. So you mentioned early
Yeah,
on that it's affordable. So I want to hit that. I want to
yeah,
give us some numbers on how it's
that's the
affordable, like how much it costs. Um, and I'm
sure,
curious if you can break down maybe some different places where people can go and even start to get this life insurance, right? They might not have any directions. I know there's different companies. Are there maybe different
sure,
programs? Are there different apps? You know what I'm saying? Like,
sure,
for instance,
sure.
Robinhood, if you it's a very easy app for you to go on there to
Super
invest in
easy.
stocks, right? So is there
Yep.
something out there like that for life insurance? If not, let us
Yeah.
know. And talk to us about some numbers, you know what I'm saying?
Okay.
Maybe you like, what's the interest rate um
Yeah,
for life
let's
insurance?
we'll definitely get into that. Let's start off with the affordability.
Yeah.
Most people are going to tell you, and the reason why they don't have it is because it's a trick or it doesn't pay out or however, whatever. Here's the thing: if you speak with a licensed professional and that person puts you in, they sit down and have a conversation with you, and they apply what we call, right, suitability factor. The suitability factor says, I'm going to sit down with a client and I'm not going to put them in anything that is above what they can handle.
Hmm.
Now, numbers wise, let's say you have a kid and you're going to put the kid, everyone's heard of Gerber, right? You got the Gerber plans and these things you put your kids on. Let's say that you have a child and you want to cover that child. That child can be like $3 a month, maybe
Hmm.
two. An adult can have coverage for life insurance, healthy adult can have coverage for 25, $30 a month, maybe 15, just depends on, height, weight. Some of these things vary. Okay. But for the most part, you're not looking at it anymore. The younger you start, the cheaper the insurance is.
Oh, that's interesting. So they're looking at like, okay, this is a healthy person. This person gonna live a long time. Okay, well, lower the rate. If this is someone that's
Correct.
maybe at risk, it's gonna maybe be a little bit
Correct.
higher. Okay, wow.
And the reason, exactly, and the reason they do that is this is still a business, right? So the insurance company is looking at it as, I have a longer period of time with this younger, healthy person paying premiums. So we're going to get more money over the life of this person versus it could be someone at the exact same age as that person, but they had a lot of health issues and they're like, the mortality rate, right? So the likelihood or probability of them dying is higher.
Mm,
So you're going to have to pay more insurance because we're probably going to pay out to you before we pay out to that healthy person. And that's the difference between prices. So a lot of people don't know they're walking around healthy and happy. It's not going to cost a lot of money.
mm. Wow. So, man, that's crazy. So break down. So essentially, what people, I just want to make it super easy for people out there to understand. So you're putting
Sure.
essentially money in a bucket, and you mentioned that you can pass it on to the next generation. Can you break down how
Correct.
that process works? And we're definitely going to get
Sure.
into, I want to, you hit on infinite banking. We're going to get into that. Um,
Yeah.
I'm curious about that. But if we can
Sure.
touch on like, you're putting money into this bucket and people are like, man, I don't see I'm not getting a benefit right now. And you mentioned there are some premiums out there or some policies out there that allow you to get benefit now, but for the most part, people are thinking
Mhm.
I'm not going to see this money. So speak to us on how
Sure.
it can you can transfer that along to the next generation.
Sure. Yeah, so a lot of people don't understand the point of beneficiaries. When you're filling out a life insurance policy, there's something that's called a beneficiary and a contingency beneficiary.
Mm,
So let's say you got young kids, and you're going to name them to be the beneficiary. In most life insurance policies, right, the person, if something happens to you, God forbid, but if something happens, those kids wouldn't be able to receive that money until they're 18 years of age. So what we put in would be a contingency beneficiary, which means that person is standing in a stead. So if the children are younger, right? If they're younger or something happened to those kids and they're not available, the contingency person would be the person that would be the beneficiary.
mm,
So it basically allows you to set up to where your family, it's ensured that your family is going to get this money and that, the benefit of you placing your money, like you said, into that bucket is going to
mm,
pass on to the next generation.
got you. Um, so you mentioned, getting life insurance policies for young kids. What age can you
Yeah.
start them off at? And if we can hit on like where can you go to, get one of these policies?
Sure, sure. So you can actually start a life insurance policy on a child at 14 days of age.
Well,
So
got
people
it.
always ask, when's the best time to start it off? From the very beginning. The
Yeah,
rates are never going
absolutely.
to be better. They're super healthy, right? They're just born. And by the time they're 18, you could see substantial gains. You should see wins inside of certain policies, or that person is, that child by the time they're 18, that policy is covered and you can transfer ownership. So,
Mm,
that's something that's major as well. A lot of people don't know that
for
for sure
sure.
because they have apps that you can go online and stuff like that. The problem of that is a lot of times when you do some generalized quote searching, it's not specific enough to you and your individual needs. So that's why I always tell people sit down with a
Yeah.
licensed professional that's going to sit with you and walk you through the process and get something that's applicable for you and something that's best for you, not just cookie cutter,
Yeah,
because this is very individualized. Yeah.
absolutely. Okay, dope. So that's great information. So now I'm curious about how the wealthy leverages life insurance. And you mentioned infinite banking, you mentioned generations and
Yeah.
generations. That's how the wealthy stay wealthy.
Yeah.
How are they
Yeah.
leveraging the life insurance? What can we learn? What can our community learn from them so we can apply it
Yeah.
to our families?
Sure. And this is something that I actually love teaching. We have weekly seminars and things to teach people. These seminars are free. We actually go into just talking about,
So,
how to break down this infinite banking, breaking down the policies in which you can start to build interest. But the way the wealthy has been, and they've been doing this for quite some time, but the way the wealthy is actually using these policies is they're putting money into it because it's a tax shelter. A lot of people don't know that these permanent policies and the money that's inside of these policies is never taxed.
mm,
Okay, any gains, as long as you stay, there is a ceiling that you have to stay under, but as long as you stay within the rules, essentially, that money is non-tax, the non-tax entity. So
wow.
you'll have someone, the rich, that what they do is they'll get 20 of these policies and they'll individually put $1 million into each one of these policies, and it's
Mm,
accruing interest. Okay, and literally the interest rate starts at like 12.5%. It can go
Wow.
up. There's some there's some that don't even have caps.
Really?
So they're gaining interest like crazy, and then they're borrowing against that money. They're not actually taking that money out, right? So
Yeah,
that's
talk
how
about
they
that.
become their own bank. They borrow against their own money, right? And so when they're paying in a loan, it's called a policy loan. When they pay that money back, they're paying themselves back. And so you've essentially just created credit for yourself. You just became your own bank. And
Wow.
then speaking of banks themselves, and this is something that people have to understand, whenever you create an infinite banking concept, or you create this concept, and you're doing this with life insurance, you're essentially doing what the banks do. There's a website, and we show people in our seminars. I sit and I show people. I go through Bank of America, Wells Fargo, JP Morgan Chase, the top three banks in America, right? Out of their total asset value of the bank themselves, they have 80% of their asset value in life insurance. It's called bank owned life insurance. They take the revenues and the money that we put in, right? Us customers, we go deposit our money, and right. And so they take that money and put it into these very same policies that we're teaching people about. So all you're doing when you start to get your own policy is you're removing the bank out of the way as the middleman, and you're making the money that the bank is usually making. Bank of America is number one right now. They have $24 billion in life insurance assets.
And that tax free for them, or is there a cap at some point for them?
Tax free money. I mean, there's a cap on the individualized policies. So what they
Mm-hmm.
do is you just get more policies. There's no
Mm-hmm.
limit of the amount of policies that you can have. So this is the way the wealthy are doing it, and the way banks do it. And so this is some pretty phenomenal stuff. And we just never been exposed to it. But you start to hear about it now with a lot of people that are talking about infinite banking and becoming your own bank, and just understanding those concepts, right? And like, what would happen if I put $50 a month, or $50 every 2 weeks, $100 a month at the age of 20, and then they show the rates basically at the end. If you did it for 20, 25 years, and they compare that to the gains from the S&P 500, and your money's higher than the S&P 500.
Mm,
So these are the things that, that's going on, and it's a possibility for us, and we just need the exposure. So we're working on
yeah.
helping to do that for sure.
Yeah,
Yeah.
absolutely, absolutely, and I love that. So I know you guys are educating the people about things like
Yeah.
infinite making, and life insurance and whatnot. But have you noticed outside of the community, are they teaching that, or is that like a secret? Like, talk to me about that.
So I'll be honest.
Mm-hmm.
It's been a secret. The actual policy itself is called a rich man's Roth, right? Like a
Mm,
Roth IRA.
yeah.
So a lot of us know about Roth IRAs, about 401ks, all these things. That's common knowledge.
Mm-hmm.
But a lot of people are just now catching up and finding out about this, because this has kind of been a secret.
Mm-hmm.
No one, if we do this, what you're doing is you're handing over the power of the bank into the common man's hands. Like,
Mm-hmm.
just think about it. If you could just create your own bank, you didn't have to, we talk about this all the time, but just think if you didn't have to go to the bank for a loan. What if
Mm-hmm.
you could loan
Yeah.
money out from yourself? There's no more red tape. You can, then leverage that into buying real estate. Real estate creates an additional revenue stream. That money goes back in, and you can flip it again and go buy something else. Maybe put some vending machines out, or, whatever. Merchant purchasing services. There's
Mm-hmm.
all these different things that goes on, but life insurance is the basis of where that income's coming from. And
Yeah.
so,
Oh man, yeah. That's amazing. That's crazy. So the crazy thing is, a lot of people in our community, or even just people in general, when they think about finances and they think of gains and they think of, they're looking for like the 20%, 50% gains, 100% gains, these crazy numbers and whatnot. But the fact of the matter is, you can probably sustain wealth a lot more longer if you go with proven over a long period of time. I talk to a lot of people and they're like, man, what can I do to make money right now? I'm like, well, why don't you go with the proven and simple way that's gonna, like you
yeah.
said, what you're doing is outpacing the S&P 500. I'm pretty sure the quick money that you're trying to get is not even outpacing the S&P. So why don't you go with something that is doing even better than that, right? So I think a lot of time people they get that FOMO, they get that feeling of like, man, I need to hop on the dog coin to get this
Sure,
500x.
sure.
And which if you get in early and at the right time, that's great. But a lot of times the long term play is what I recommend to people is it's what's most going to be most beneficial for you in your pockets.
No, for sure. And I think that in a lot of cases, this is like when we sit down and have a conversation about, um, you know, delayed gratification.
Yeah.
And a lot of people don't like delayed gratification, but it's seriously like gonna take it to the point of how do I look holistically? How do I look at my life?
Mm-hmm.
Because like you said, everyone wants now, the 50x, however, Dogecoin, whatever, however, right? And a lot of people go into crypto and they don't even study, tokenomics, but that's a
Yeah.
whole nother subject. Let's talk about that later. But you just go into, crypto, whatever, and you're just
Yeah.
hoping for the best. Whereas this is, substantiated information. These numbers are like facts. And
Yeah.
it's like, look at your foundation. Let this be your foundation. If you're putting whatever your portfolio or your investment plan is, if you put in minimally here, right, into this foundation, I can actually create, and this is something that we like to do is, come out and show what we call an illustration. So it kind of just shows a projection of where you would be at a certain point in the future. And a lot of times when we sit down with those illustrations, people minds are blown because they're like, dang, this is like, I'm not putting in a whole bunch of money. And
Mm-hmm.
it still got me to this point. I'm
Yeah.
like, yeah, that's the power of compounded interest.
Compound
So as you
interest. Yeah.
said, delayed gratification and understanding that it's not about the right now money, it's about longevity because,
Longevity.
you get it quick and then you lose it quick, right? So
Exactly, exactly. Love that. So we can start wrapping this thing up pretty soon. You mentioned earlier the foundation of a finance house you believe is life insurance. If you can build this financial house, man, what does it look like? You got life insurance as the base, the foundation. What is the walls? What is the roof? If you can build it, what does it look like for you?
so for me, like I said, yeah, for me, the foundation, of course, is life insurance. And then you got different rooms, right? And the rooms obviously have their walls. Um, Different rooms would be for me real estate,
Mm-hmm.
right? Uh, Most people know real estate. Another
Mm-hmm.
room is going to be crypto.
Yep.
Okay. Another room is going to be anything that's going to give you passive and residual income.
Mm-hmm.
Maybe it's a vending machine. Maybe it's a Bitcoin ATM somewhere.
Mm-hmm.
Amazon just came out with these lockers where people that live in rural areas, you can take your stuff and they deliver it there, and instead of delivering it to their
Yeah.
house, you can own those type of things. So that's the third room, and then usually for me it's like four rooms. But the fourth room for me is obviously stocks, right? I mean that's the kind of
Mm-hmm.
so but you want to make sure that you do your research. You want to make sure that you understand the risk, and everything, and you're not just going crazy into it. But yeah, that's how I look at it. Four rooms for me can make up a whole house, and that house can be something super beautiful.
Yeah.
And at the end of the day, if everything else, if the walls all fall on the house, I still got the foundation that I can rebuild off of again. So that's
Yeah.
why life insurance is there, because it's there and it's going to be there.
Yeah,
So
I love that. Love that. Man, anything else that you want to touch on in respect to life insurance or finances? You gave some really good information. Is there anything else that we missed that you wanted to cover?
no, I think I just want to make sure that people understand that obviously life insurance is affordable.
Yeah,
Not all types of life insurance are for everybody. But get with a licensed professional and let us help you out. Let the licensed professional walk you through, have a conversation with you, and place you in something that's going to be good for you and your family.
yeah,
Because life insurance is an act of love, man. It really is. Because even if you're just looking at it as traditional life insurance, I pass and my family gets money, it's an act of love because you're doing it in the future for future people to take advantage of. So
yeah.
that's it.
Yeah, I love that. I love that. Thank you. And before we wrap it up, you mentioned it earlier, man. We want to send huge prayers out to the island of Puerto Rico. we're both Puerto Rican, so I wanted to take a quick second
Yeah.
to read off some foundations that people can support. I know some people are looking for ways to support
Please.
and send money and whatnot. You guys may have other ones out there. Feel free to support in any way you want. But if you guys look up on Instagram, some of these profiles, there's definitely some ways that you can support the island of Puerto Rico. Friends of Puerto Rico is one. United Way to Puerto Rico is one. Let's see. There is another one called World Central Kitchen. That seems like it's something that's a global thing that they go in and help people out. And then you got one more. Let's go with Casa Pueblo in Puerto Rico. So check out those different foundations to help out Puerto Rico. It's obviously
Yes.
words can't describe how bad things are out there. So we definitely want to help and support our people as much as possible. But with that being said, just want to say thank you for coming on here, man, and giving that information about life insurance and finances and whatnot. I really appreciate it. I learned a lot myself. I got some work to do. And I hope you guys took some notes. Share this episode with one other person or family member that needs to hear this episode. Before we go, where can people find you? Where can people reach out to you if they have any more questions about life insurance?
Yeah, no problem. You guys can find me on Facebook, also find me on Instagram, Twitter as well, Rico Ramirez 86.
Mhm.
So that's at Rico Ramirez 86. And yeah, shoot me a DM or any other things that you need, and I'll make sure to get back to you.
Absolutely. And we'll definitely leave the links to your Instagram and Facebook profile in the description of this podcast. You guys already know where to follow us at Latin Wealth on Instagram. And with that being said, it's your boy Chris. We'll catch you guys next week. Peace.